We are going to take a look at the T accounts. So on the top of the T horizontal line, there's the name of the account. On the left side is the debit side. On the right side is the credit side. Suppose you have a debit $5, a credit of $9. So the net effect is that you're going to have a credit balance of $4. So that's how you report a $4 credit balance. So now let's get rid of this. Use a different example. Suppose you have debited $11 to the left side and credited $7. So now you should have a debit balance of $4. Okay, so this is the basic of the T accounts. With that, let's take a look at this example. Suppose ABC company calculated at year end that it should pay income tax expenses $5,000. At year end, the company paid $2,800 to the tax authority. We are going to record the journal entries and use T accounts to figure out the balance of income tax payable, and that is the amount the company still owe. So let's first set up three T accounts. The first one is the income tax expense account. The second one is the income tax payable, which is a liability account. And the last one is the cash account. So this is the income tax paid. Okay, so the company expense, the income tax expense, that balance is increased by $5,000. And we know that the expense account is a left side account. It has a debit normal balance. So therefore, its balance will increase if this account is debited. Okay, so now we are increasing this account with debit $5,000 to the left side of the T account. So the company's liability, which is the income tax payable, is increased by $5,000. We know that liability account is a right side account. It has a normal credit balance. Therefore, its balance will increase if this account is credited. So we're gonna credit $5,000 to the right side of the T account of income tax payable. So the company used the cash $2,800 to pay for the income tax. So the cash balance is decreased by $2,800, and the cash is an asset account. It has a normal debit balance. So therefore, the balance is decreased by credit. So if the cash is credit, the balance will decrease. So we're gonna enter $2,800 to the right side of the cash T account. So the company's liability will be reduced because right now you don't owe $5,000. So that liability tax payable is a right side account. Okay, it has a normal credit balance. So if you want to decrease that balance, you have to debit that account. So we're gonna debit $2,800 to the left side of the account. So now let's take a look at the T account of the income tax payable. So we compare left side and right side. We conclude the credit balance should be $2,200. So at the end of the day, now the company is owing $2,200 to the tax authority. I hope this makes sense. Thanks for watching.